We now continue with more of the Mark Milton Show with The Smash.
The Mark Milton Show with
Must
The Smash, broadcasting from the Miller Furniture Studios. Want to tell you about one of our newest sponsors, Ravensburg Incorporated. Since 1958, Ravensburg has provided institutions throughout the Midwest and South with movable wall systems, laboratory casework, athletic equipment, and customized commercial cabinets. The Ravensburg Company is a family-owned business that has grown and is now in its third generation, with Bill Ravensburg leading the helm. They've got a consistent focus on quality work and rapid turnarounds, which set them apart from the competition. Their project teams provide design, budgeting, union installation, and maintenance services to clients throughout the South and Midwest. They are headquartered here in St. Louis with satellite offices in Oxford, Mississippi, and Bloomington, Illinois. For more information, please visit Ravensburg.com. Thank you guys for your support of the show.
Nice.
So, talking money, talking taxes.
Yeah.
This week, Treasury Secretary Mnuchin in some comments suggested the Treasury Department when Treasury Department being the IRS, may extend the tax filing deadline to September 15th. You know, they already extended it from April 15th to July 15th. The key thing in there is not only would they be extending the filing deadline, but you also would have until September 15th to pay whatever tax you owe without incurring additional penalties. So it'd be a big move. I think, as someone who does taxes myself, I mean, we're in pretty good shape as far as getting clients done by July 15th. Yeah. But even if you file by July 15th, if they were to extend this deadline for payment, that would provide some nice relief for taxpayers who may be, saddled with an unexpected tax bill and maybe without the same amount of funds they were expecting to be able to pay it.
I'm all for the extension, but what happens to the October date? Because October was always the date that you forget about. After October or whatever the date was,
right?
You can't.
So you could still actually apply for an extension to, at least unless they change something, you could still apply to for an extension to file until October 15th, even if they were to extend to September. Again, the difference there, extensions have always been an extension to file. It's never been an extension to pay. So even in the past, when your tax return was due April 15th and you filed an extension until October, you would incur an additional penalty if you ended up filing in October and owing money. So you would be
because I didn't pay on the 15th.
Correct, by April 15th.
Really?
So you need to pay an estimate, at least at that point, when you file your extension before April 15th, to make sure you're not going to owe. Now that can be difficult if you don't know, if you don't have all your information. But the idea is it's always been an extension to file, never an extension to pay, which makes estimated tax payments critical, which is what we're going to talk about here today. What are estimated tax payments? Generally, for most of the population, as an employee, you're having money withheld from your check, and you get a W-2 every year that shows the amount of withholdings. Hopefully, those withholdings are sufficient to cover whatever tax liability you may owe. And in essence, those withholdings are estimated tax payments, right? You're paying. We have a pay-as-you-go system. So in America, you're required to pay taxes as you earn it. And that's the idea behind estimated tax payments for people who might be self-employed, 1099, who aren't having money withheld. You have an obligation to make quarterly estimated tax payments so that you don't, at the end of the year, have a huge tax bill and you're paying as you go. So that's one of the things with the extension to July. They extended the first and second quarter estimated tax payments to July 15th as well. So people not only have to pay their 2019 tax bill before July 15th, they also have to pay their first quarter and their second quarter estimated tax payments, if applicable, for 2020 before July 15th. So it's a big, July 15th could hurt for a lot of people because you got it all kind of piled up in on one day. Because normally your first quarter would be due April 15th. Your second quarter, weirdly, would be due June 15th. It's actually not a true quarter in the sense of the way they do the calendar dates for estimated tax payments. But now it's all due July 15th. Then you've got September 15th would be your third quarter. So if they extend it to September, you're going to have, presumably if they extend the estimated tax deadlines, which I'm not sure they would do, there's a potential you could have your 2019 taxes due on September 15th and your first, your second, and your third quarter 2020 estimated payments all due on September 15th.
Really?
So it remains to be seen. This hasn't been done yet. It's not final. As we sit here today recording on Thursday, we don't know if they're going to extend the deadline, but I certainly would be a favor of it because I know many of my clients who would appreciate the additional time to hopefully things get back up and going, and also people, I think for the reason they would do this is also because a lot of people still haven't maybe been able to get out and see their accountant.
Sure.
They want that face-to-face time to be able to see their tax person.
I have a question, Mr. Milton.
Yes, Asher.
Yes. Question is this: what penalty do I have to pay if I ain't laying this stuff down every 3-4 months, whatever the?
Well, so there's a couple different penalties. There are penalties for underpaying or underpayment penalty, which is basically when you go to file, if you owe more than $1,000, then
you're
subject
to
a penalty. Yes, and it's calculated based on the number of days that you're late and the amount of the tax that you owe. And then there's also the failure to pay penalty. Now that's the one I'm talking about, where if you file your return but do not pay what you owe, then there's a failure to pay penalty, which can be stiffer, and that continues to accrue, and it can get
10%,
up to
20%.
It's calculated. I think it's every month, 5% every month. I mean, it's capped at 25% of the tax you owe. So ultimately, you could end up it's pretty stiff. Plus, the interest continues to accrue, and so obviously, to avoid that, you want to make sure that you're planning. Oh, I just got cut. My mic got cut there for a second. Obviously, you want to make sure you're paying as you go to avoid those kinds of penalties. Plus, you don't have to make payments just every quarter. You can do them more frequently. Let's say you get a big, bonus check or something, and you're 1099. You can go on the IRS website and make an estimated tax payment right then and there. Get the money out of your account, give it to the IRS. I know most people don't want to do that, but that ensures that you're, let's say you get a bonus check for $100,000, and you're normally in the 25% marginal tax rate. So go online and make a tax payment for $25,000. I understand it sucks to do that, but it also sucks to have a $25,000 tax bill with penalties and interest if you don't pay it by the filing deadline.
Well, if I get $100,000 windfall, I'm going to the boat, my man. Forget about the.
You still got to pay taxes. Even if you lose the boat, you still got to pay taxes. It's not going to help.
Yeah.
Put it all on black. Are you a gambler?
Not at all.
No.
But boy, I tell you what, when I said I'm going to the boat, I meant I was going to buy one.
And head to the Cayman?
Head on out.
Head to the Cayman Islands?
I'd be GOHN gone I was not even here.
Yeah, well, that's another option.
That's tough, man.
We're not going to, here on the Mark Milton Show, we're not going to advocate
of course not.
fleeing the country and setting up residency in the Cayman Islands, which some people do
they don't have property tax there,
evade taxes. I have no idea what they have there. I know that they're a beacon for, super wealthy individuals.
Yes.
And, they're notorious for being a tax haven, which is become harder and harder to do. But so if you got questions, we're here to answer any tax questions you might have, or at least I'll try to answer them. You can email me at mark.milton@stltaxlawyer.com. We will keep it confidential. We won't reveal your identity. If you've got a serious or sensitive question you want answered, we'll try to do that. We try to do a tax segment every week like this and kind of just talk shop and kind of go through what's going on in the world, such as estimated tax payments, the potential extension of the filing deadline. So I still got to file my taxes. I haven't filed my own. It's like the painter who doesn't paint his house. I still got to finalize mine, which is always fun now that I'm self-employed. I started my own firm about 3 years ago, and it's a different world when you have to worry about making estimated payments and you don't have the luxury of somebody just withholding pay from your check, and you kind of don't think about it as much. I always tell people, if everyone had to make estimated payments, they'd have a much different view of our tax system. They'd be a lot more pro-Republican, pro-conservative if they, had to feel the pain of physically writing a check or going online and making a payment versus just having it withheld from your pay. And that goes the same thing for the state. I mean, not only do you have to make estimated tax payments to the IRS, but, in Missouri, for example, we have income tax, and, you have to make estimated payments to Missouri as well to avoid penalties and a big tax bill at the end of the year. So, again, the St. Louis earnings tax is something that people who live or work in the city generally have withheld from their pay and don't really think about it. But if you have a business in the city, you're on the hook for that 1% tax, and that's if you got a large business, you got a couple $1 million in revenue, and that's that's going to hurt to have to pay that.
I've been a radio guy for about the last 45 years, and I'm changing my voice right now, and because in case anybody's listening, I might be up for a roll. All right, so sometimes my quarterly payments, I ain't got the money that particular quarter because the stuff goes in and out, up and down, and all that. Is that like making me a criminal or anything?
No, it's not. It's not making you a criminal. It's just, again, you're putting yourself behind the 8 ball if you come to the end of the year and you don't have, and maybe you don't. I mean, if you're not really earning income, that's what's tricky about. It's a hard thing to advise people on sometimes because estimated payments are just that. They're an estimate, right? So you might have a first quarter where you don't really make money, or you might have a first quarter where you do really well, but the second, third quarter, fourth quarter aren't as good, and so you don't have to make the exact same amount each quarter in terms of estimated payments. It's really not so much a science as it is an art. The only scientific piece of estimated payments is, if you make under a certain level and you pay, I think it's 90% of your prior year tax liability, then there's no penalty. Okay,
really.
So as long as you're making that, or if you make more money, as long as you pay 100% of your prior year tax liability, because they're assuming your income's going to go up. If you have a huge windfall that was unexpected, you're not going to get hit with the failure to make estimated payment penalty as long as you pay the tax that you owe by the time you file. So it's a complicated area. It can lead to a lot of frustration and confusion for especially small businesses and self-employed people. But I think the point is try to do what you can to pay as you earn. Keep an eye on your income for the year and try to make estimated tax payments as best you can.
I listen to you and your acumen, and you are astute to this whole thing. And I'm wondering, just as a personal guy, when you were dating your wife, did you talk to her like this, man?
No, not really. I mean, I would tell. So, well, more so after we got married, when I was working for the DOJ, I would tell her stories about some of my cases, and you'd think tax cases would be, incredibly boring, uninteresting, right. But they're actually pretty. There's usually some sort of fact pattern. Like I told the story about. When we talked about trust fund recovery penalties, about the owner of a business who got in a bar fight, killed a man. It led to, having quarters of unpaid payroll taxes right. and a whole deal. So usually there's some set of circumstances that gives rise to really serious tax problems. So it can be somewhat interesting. But no, I try to avoid talking estimated tax payments. But she gets it. I mean, she knows now that I'm self-employed that it's a different animal than being a straight W-2, and so we, we're fortunate that she gets paid a W-2 with her job. So we kind of,
Do you kids, and I don't live with you or anything like that, do you in your romantic inclinations, show each other a 1099 and everybody's like...
Yeah, it's a real turn on. That's the go-to. No, we've gone off the rails. All right, you are listening to the Mark Milton Show.
We've gone off the rails.
That 1040 is a real turn on. Just whip out that tax form. Mark Milton Show with the Smash. We hope you enjoyed it. As I said, you can find us at 590thefan.com.
Yep.
themarkmiltonshow.com. Please subscribe, Apple iTunes. Leave us a review if you would. It'd be appreciated. We'll be back next week with some more entertaining programming, and we wish you the best.